And everybody, it's Tim Reazor with Revere Asset Management. Just before 3 o'clock here, it's 2:45 Central on a Wednesday night. So quickly, stock owners and market lovers, before we begin. So markets are open still for about another 15 minutes. Just want to catch the end of the market day, and this video will probably last a little bit into the close and show you what I'm seeing today and what was shaping up pretty much all day. And if you have the ability to watch the ticks, this tick picture for the last 2 days has been nothing short of amazing for bears, or it's been bearish, whether you're bullish or bearish. It's been, I just haven't seen a 2-day period like this in a really long time. If you have the ability to look at $ TICK on your Thinkorswim platform, please do so. And you can see the dashboard that I have up here, S&Ps, NASDAQ, what's been happening, the VIX. I want to show you a setup in the VIX. These are bonds, Apple, crude oil, the Dow, the Russell. This is the breadth of the market, the NASDAQ breadth and the S&P breadth and the dollar. But let me show you something that we talked about on Friday on the podcast with you that you could have watched or listened to over the weekend. And it's been like this with for a couple weeks, and I've highlighted it a few times, and I especially brought it to attention here. And then before I show you that setup real quick, if you need to get to that podcast, you just go to Revere Asset podcast page, or you can go Daily Market Insight, it's in there as well. And then if you have any questions, you can't find it, or you have any questions on the setups or the things that we talk about on the podcast or on the 5 videos that Don, Hunter, and I put out every week, all you do is you can call 855-732-5932, Tim at Revere Asset, Don, Hunter at Revere Asset, and if you want to talk to America's fiduciary right there, Dan at Revere Asset. But real quick, let me just let's show you this. So I spent some time talking about the VIX inversion, and the VIX inversion, quite frankly, after they started pumping the system with QE in April or May of 2020, this VIX inversion hasn't worked. And this is the first time it's worked. And I explain what the VIX inversion is on the podcast, so go back and listen to it, but you're still inverted and it's gotten wider. And so someone who's listening to this that understands the VIX inversion, of course it's getting wider, the market's getting worse. But what you need to understand there is, like, when people are looking for short covering, or they're looking for the markets to revert back to the mean, possibly to the upside, doesn't mean they can't do it, but usually these give way first. And this signal's actually gotten more entrenched, even after that big Biden gave a speech just yesterday, and the markets really rallied hard, and the inversion didn't disappear. And so when you see that inversion, it means risk is here, risk is now. And so if you have stocks or options with losses, or some gains or some losses, wrap up your book. You don't have to sell everything, but you trailing up stops, you got to trade your plan. But potentially think about wrapping up your book. Don't let losses get exacerbated, that type of thing. Okay, and then we talked about this pattern too with the VX, and so we're looking at not VX, but one more time, VX on a daily chart here. So we've seen it a couple of times, and it really comes to life on the average true range chart, where we talked about the setup where it hit the third ATR, you come back to -1, then you retake the mean, and markets, meaning S&Ps and NASDAQ and Russell and Dow, go lower. And here you got up to third ATR, pull back -1. You only got up to +2, and then you pull back to the mean you hold. Look, this can get a lot worse. This isn't even up to the third ATR. And so if you're thinking the market can't go any lower, I assure you it absolutely can. And I'm not being facetious or trying to be coy with you. This VIX isn't extended. This VIX futures picture here, it can go, even it went to +2 ATR, that's at 32, and we're at 29.65. And you're like, Tim, that doesn't, I don't compute that. Well, I'll give you a little more granularity here. A $1.74 move to the upside here in the VIX is 6%. So now you can work that out in your head. So look, this market still can be stretched more to the downside. You got to understand that oversold is a state of mind, but I can show you what overbought looks like. Overbought is something that you absolutely can kind of peg a little bit with more clarity than you can with oversold. And what do you mean, Tim? Well, I can tell you that this third ATR typically will trigger at least a minor pullback, and I've shown you that over the years. But like if we're looking at Penn, we're looking at pen stock here on these ATR charts. Just because you hit the -3 ATR doesn't mean you're going to go higher. Like you might bounce a little bit, but look at this, it's riding the wave down. But you hit the third ATR up here, you know, 1 day, 2 days, 3 days, and then you dance around and then you revert. This setup over here on your left-hand side of your chart is so much more predictable than trying to time your longs on this setup. Oversold is just a state of mind. So if someone tells you that the market is oversold, it can absolutely positively go lower. And you're like, Tim, well, how do you know that? I don't, because, and I know it's a market, anything can happen, but I'm telling you with all the assurity in my body that I can muster for a market that I know that anything can happen with, especially this particular market. You're not extended on the VIX futures. That is a huge, huge tell, okay? That you need to be prepared for the markets to potentially go lower. And so if someone says, I'm nibbling on some stock, I hope the nibbles are small. Doesn't mean it can't work. I'm just saying you need to understand where you are in what? Time and space. Situational awareness, market situational awareness is like one of the biggest skills you can have right now. So let's look here, S&Ps. You've given up so much here, and you're like, well, Tim, what have you given up? Yeah, well, you're only coming back to the January 24th lows, but if you look here to the left-hand side of your chart, that brings you into spring, summer trading zones of last year. It's what, 8 months, 6, 7, 8 months of market gains that you're giving back. Now, how much lower can we go? How much energy is there to go low? I think you need to start looking and taking a gander here at monthlies. And yeah, the monthly mean is at 40.48. Are we going to get there? How often when's the last time we got to a monthly mean? Pandemic. And then the last time we got there was when we started raising rates at the end of 2018. So keep that in mind too. The last time, let's say that we only look at monthly mean outside of pandemic years. Okay, well, the last time we touched the monthly mean was the last time we decided to raise rates in this country. Is that the course we're on right now? Potentially. So we'll keep it on the monthly charts here, and we're going to look at NQ. And look, we could have a rip roaring rally tomorrow. You've seen that happen in this market. It's very news driven. We're at the monthly mean right now in the NQs, but you're not at the monthly mean. And I think this is the journey you're on with the QQQ. Well, no, you're there. Okay, I take it back. You're at the monthly mean. You weren't there just a little bit ago. You're at the monthly mean right now on the QQQs. And so, yeah, this is a super interesting level to me, and we'll see if it holds or if it wants to break through a little bit, and it absolutely possibly can. And the last time it did that was when here's at the end of 2018. Came down to the monthly 34. But you're seeing stocks reevaluated or revalued right now. We've addressed all that. I'm telling you, this podcast, if you have not watched it or listened, you can get on Apple Tunes, Google Play. You can watch it. It's a video. You can just click right here, sports betting arms race. If you haven't watched it, I highly encourage you to watch it, because the first part of it is super interesting, dealing exactly with what I'm talking to you about right now. So let's go back here to the charts. Let's look at, say, the YMs. And so what does all this bode for tomorrow? So we'll check back in here with the markets in a second. YMs are not down here at the monthly mean. 32, we'll call it 32.3. So that's you have 33,000 right now. Can you get another 1,000 points? Yeah, absolutely. Like this market doesn't have to be done. It looks stretched. I understand that, but if you take a look at, say, the tick picture, you take a look at the VIX futures, and then let's bring something else into it right now. Let's bring in the put call ratio. Is the put call ratio at a bottoming level? And again, it's a market and anything can happen, but 0.89 ain't it. And this 10-day moving average, you want to see this 10-day moving average that I'm about to extend out here. You want to see that at least at 0.9, preferably to 0.95. You want to see that line extend. Look at it's higher here. You want to see it extended up to this level and you want to see what the put call ratio up in these levels, and it's not there. Like, and look at what you got. You got that little intermediary bottom. You don't even have that right now. It's like the market. It's like the participants aren't even paying attention. It's like this thing is broken. You want to tap on the glass and go, "Are you working?" It's like a gas gauge. Like, do you trust it? I'm a little astounded that the market is doing what the market's doing, and this put call ratio isn't somewhere near up here where we've seen bottoming before. So, and like here, you got a little bit of a 0.7 reading, this big spike, and even here, they went up till for a little bit, tested the lows and went a little bit higher. Those are the S&Ps, by the way, at the bottom of the chart. It's hard. I mean, you look at the ADD, the ADDs at just near lows for the day. It looks like once it got 4 minutes left in the trading session, it looks like you want to go out towards the lows. Like, let's look at the ticks. Do we see any evidence of short covering into the close? And maybe this is one of those sessions where they start covering their shorts after the close at 1500 Central, because they have till 15 on puts that don't expire, calls and puts that don't expire today. They have until 15:15 to trade those. Maybe. But right now, I see markets that are looking like they want to go out on the lows, and that to me is absolutely super interesting. So it's easy to tell you. By the way, I think RTY has more room to the downside, but it doesn't mean it's going to happen. Okay, so we'll look at the small caps. The monthly small caps are already under, and on the monthly chart, but these look like to me that they potentially want to come down here and retest this 1914 level. And then let's look at that on an ETF basis, on IWM. Most of you don't trade futures or look at futures, so that'd be what, 188, 190 to 188. And I think that it's only 4 points away. Will it get there? Perhaps, maybe not. But you're within striking distance. So it's easy to say, hey, things are bad, bearish, and the world coming to hell in a handbasket. But what is something that could be possibly working, and so, and are they extended? Yeah, they're extended, but like someone might say, well, what's this really about right now? Is it about Putin? Like some of you have asked, who cares about, not, you haven't said who cares about the Ukraine, but like, what does this have to do with our stock market? And really, it's has a lot to do with what the Fed's about to do. Trying to crush inflation. They're trying to kill inflation. Think about it. The Fed is trying to kill inflation. Let me show you. The Fed's trying to kill inflation by raising rates, and they've tried to get the market ready for it. But food staples like wheat. Look at wheat. Wheat skyrocketing. Oh, that's a skyrocket for wheat. That you won't find many bullish charts looking like wheat. And so, yeah. Food, look at soy, ZS, oops, pardon me, soy with a super bullish chart. Like the food isn't being tamped down here, folks, right? Is crude, let's look at crude oil. These are daily charts we're looking at. Crude oil has come off a little bit, but I mean, that's a pretty bullish chart if you ask me, right? So energy's still high. For some of the biggest staples in the world, the wheat and soy are still high. Like you're not taking down the things that the Fed wants to take down to make it easier on the US consumer. So does that mean the Fed's going to have to do even more to counteract the forces of Russia and Ukraine to try to get to their original goal of tamping down inflation? That's what this is about. So oh, okay, there's the bell. Boy, not too much in way of short covering. Maybe they'll do it after the close here. So ticks are there, and we'll see. There should be some relief here. Well, let me show you what I'm looking at in the indices. A little bit, I would think, but we'll see. And by the way, they even floated the idea of releasing some oil from the strategic reserves. Really hasn't budged oil. Kind of a, look at this, breath goes out at the low. So what's working, folks? Like what can we look at to say, hey, this is where money flows? And a lot of you probably understand this. And if these things are leading, it's probably not the best thing. Coca-Cola, right? Coca-Cola is leading. And so that's a super bullish chart. And I want to do something with you after I run through these charts. Kellogg's is leading. I don't think that's as great of a chart as the Coke chart. How about MOS, right? So fertilizer, got to grow this stuff that is in demand. Yeah, we got some fertilizer there, up 2% today. That's Mosaic. And then we got some ETFs. How about IAUF? So that's a gold ETF, and look, not at 69, the old highs, but that's a bullish chart right there, extended. XLP, and you have to look, just because I'm talking about these videos, I can't suggest this enough. I can't stress this enough. Not suggest it, stress it. These videos are for your edification purposes only. They're never to be misconstrued as advice. If you want to seek advice, I need you to call 855-732-5932. Talk to America's fiduciary, Dan Stewart. But these, like, if you look at, let's get back to Excel. XLP, Staples, not as bullish because there's a bunch of other stocks in there when you start breaking out like Coke and Kellogg's. But how about OILK, oil ETF? And I'm picking these for a specific reason. Not as great of a looking chart as, say, the crude chart. How about DVN? DVN. There we go. DVN, yeah, that's a bullish chart, right? Devon Energy. And then we're going to do a little bit of a drill together, fellas, or folks, when we get done here. IDV, so these are just like div stocks out of the iShares, and then UUP, which is US dollar. So now I've shown you these charts of things that, like they're working. They look a lot better than what? SPY. They look a lot better than, Tesla and TSL. They do it right. Yeah, Tesla. Look at Tesla today, down 7%. And so it, like when the generals are falling, Tesla, MSFT, Microsoft. How about Google? Like, look at this. This is like looking for love in all the wrong places. These will be buys again soon. I don't know how soon, but eventually. But they're not right now. Okay, so what is it about like something like a UUP or an IAUF or a K or a KO? What is it about the tickers I just went over? Let's bring you here to the trade tab. And so what we're going to do is let's just let's do KO. And I want you to look at this box right here, this yield box. So 2.86. Now remember, if your price is going lower, none of the yield is worth it, right? But when you have charts trading sideways to up, yeah, kind of makes sense. Okay, 3 point here. Let me circle it and see if it stays in the same place. Circle it with my pen, and so your eyes can be drawn to that number each and every time. So we did Coke, we did Kellogg just now. How about Mosaic? 1%. Now, how about that gold ETF, IAUF? Yeah. Now look, you gotta also, let me be very clear here. There's only 4,000 of this traded today. That's a low. Not much of it is traded. Okay, keep that in mind. How about XLP? Super heavily traded, 2.74%. How about OILK, the oil ETF, 2.99%. How about IDV? 2.49%. And this is the one that I want to leave you with. This is the thought that now you've got the dollar surging. Well, surging. Let's go back to that UUP chart, which is super interesting. This is the dollar index, bullish index. And you haven't taken out highs back, when the market was really starting to come unglued, where it bottomed to 124 and the dollar still kept going. You kind of got that set up now, and it's probably easier to see it here. There you go. That's a bullish. Look at this chart of the dollar. The mean, look at this. This is what they call bullish. Doesn't move that much. That's the problem. It doesn't get a lot of attention. But for that lack of movement, per se, what do you get here? 2%. Ah, you can't see it. There you go. 2%. And so right now, this market is re-rating tech, re-rating high multiple. You already know that. But the things I just listed with yield and productive, we'll just quantify them as productive, if not extended chart patterns. That's where the money flow is. And then circling all the way back. Someone says, what does Ukraine and all this have to do with the US stock market? This is about inflation. So hopefully that helps. Hopefully it helps make sense. Hunter's got your video tomorrow. Don's got your video Friday. And then we're going to do the podcast Friday. It's going to be a lot of fun. We'll have a lot to talk about. So hopefully that all helps. And I will see you at the next update.